to learn about issuers, or to learn about investors, or to learn more just about the different people, the different groups that are interacting within Tinlake. These are just what we have today. So we want to keep brainstorming with you and as a team and as a community on how we can do this better. So that's it for me. And if there's any direct questions right now that are pertinent to what I've shown today, I'm happy to answer them. And if not, we can continue to progress. Ash.
Any questions, guys? Feel free to get on the mic. No, don't think so. So I guess we can. I guess we can move on to Quan and Manrui from Untangled. So please, guys, tell us more about you guys' pool.
Thanks. May I share my screen?
Of course.
Oh, great. Can everyone see it?
Yes, thank you.
Thanks, Centrifuge team, for inviting us to speak on this call. So this is the founding team of Untangled Finance. So I'll first like Quan to introduce himself before I start the presentation. Quan, you there?
So, yeah, I'm here. Just turn on my my video. Hello, everyone. Thank you very much for participating on the call today with us. So my name is Quan Lê, and I'm a co-founder of Untangled Finance. So the background is that I used to work in financial services, started in Vietnam and moved to Australia and then the UK. Then I left the city of London to start growing rice in Africa. So some people basically said that I was sort of yield farming in Africa for all those 7 years, but reality is that we were helping Africa to grow more rice so that they don't have to import from other countries like Vietnam and other countries in Asia. So from that experience, we realized there's a lot of issues within the trade and supply chain, and it's just not just relating to having the right varieties and having the right engineering techniques when it comes to water, but it's also about financing. So how can you support the commodity supply chain so that they can grow productively, but they can also have more secure access to the market. But all of that is underpinned by the ability to access finance in a cost-effective way. So we started Vincabi and with Man Ray as well, and another co-founder. And then a year ago, we started Untangled, which is the journey that we are sharing with you today, which is a sort of distribution platform for many type of trade, supply chain, finance, asset, but also some other type of assets. So very happy to be here today, and we'll support Man Ray to the presentation and answer towards the end of the session. Thank you.
Thanks, Quan. So I am Man Ray. So prior to doing startups, I did financial due diligence, specializing in financial services and energy sectors within PwC London, and then M&A in National Grid, mainly focusing on renewable assets and energy transition. So Quan and I started Vincabi in 2017, as he mentioned. So the purpose of that is it is a supply chain trading and financing platform, and we bring real world assets to the blockchain. So at the moment, so this solution is being used by banks and asset originators in emerging markets. So Vincabi allowed us to gather a lot of experiences for the entire end-to-end commodity supply chain. So right from the we help farmers to borrow seeds and fertilizers at the beginning of the season, to financing aggregators to aggregate raw commodities at harvest, and we provide finance inventory financing solution for corporates, for processors, then help big corporates to set up their own supply chain finance program so that they can pay their suppliers, smaller suppliers, earlier based on purchase orders or invoices, to ultimately we facilitate imports and export finance. Coming from this experience, we realized that, as Kwon mentioned, there is a need for these asset originators to be able to raise money to refinance themselves, and hence why we set up Untangled Finance. It is a digital securitization platform and asset finance platform that to help asset originators to refinance their book via DeFi. So let me move on. Okay, so here is something about the Untangled Digital Credit Fund. It is a Delaware entity called Up Series LLC, and this fund is set up by Untangled Finance. And Untangled Finance Limited is regulated by the UK Financial Conduct Authority. Our first pool on Tinlake will be launched this week. So Untangled Digital Credit Fund will issue job and teen tokens via Tinlake in exchange for DAI. With the DAI, we'll then exchange to US dollars and then invest in promissory notes from our asset originators. Each asset originator has its own SPV, so we call this an asset SPV. This is the place where real world assets are purchased and held. So the promissory notes are backed up by the real world assets like loans, invoices that our originators ultimately have with their borrowers. So Untangled Digital Credit Fund will focus on three main asset classes: trade and supply chain finance, SME loans, and then green assets. For our first pool, the asset classes we're focusing on is trade and supply chain finance. So these are short-term working capital lending that are typically self-liquidating. These assets are of much lower risk compared to other type of asset classes. According to ICC, so International Chamber of Finance, they reported that there is less than 0.5% of defaults for these asset class. Within trade and supply chain finance, there's a huge funding gap of over $3 trillion underpinning the real world economy. And the gap has been growing bigger and bigger because of the pandemic. Financing these asset classes, meaning that we finance the real world economy. And we're working on a number of asset originators around the world, and they have a deal pipeline of about 100 million within the next 12 to 18 months. So for example, an exporter of cashew nut in Africa typically have to wait for 60 to 90 days to be paid, or the same goes a rice producer in Vietnam or in Indonesia. They will also have to wait this long to get paid. We help them to get paid quickly so they can ramp up their productions. So just moving on. Given our experience and focus, so it's in emerging markets, specifically in Asia, Africa, and Latin America. These regions are the engine of the global economic growth, as well as it has the most population as well. And as you can see from the IMF forecast, shaded green here are the highest growth countries. In the next year, the growth is strong across the world because of the recovery from COVID. But when things are back to normal, these regions are the highest growing regions around the world. So now I would like to talk a little bit more about the benefits that we could potentially bring to the Centrifuge communities. For senior note holders, the benefit is obviously diversification. Real world assets are not correlated to any of the crypto asset up and downs. Even within the real world assets, there are diversification benefits because you are not exposed to one single originator, one borrower segment, one collateral type, or one geography. It's safe because we have institutional grade management methodologies, but also what we call a safety layers. They consist of credit insurance. So for some originators we work with, they have credit insured for the entire exposure of theirs. There is also a layer of junior participation to provide further buffer. We have 10% tin tranche, untangled digital credit fund originators will take 100% of this tin tranche for the first pool. Later, we'll open more tin tranche to outside investors in Centrifuge and Untangled network. Last but not least, we have an over collateralization layer. So depending on the track records and results from our due diligence we have with originators, we may request them to over collateralize even at the asset SPV level. So here is, so I would like to just drill down a bit more on the transparency point. And this is another benefit that we can provide. We can provide an unprecedented level of transparency, including on-chain portfolio performance monitoring, reporting, and triggering. So we were one of the 6 fintech companies that was chosen to join the UK Financial Conduct Authority's first digital sandbox. So we benefit a lot from the data that was provided to be able to train our models and platform. Here are 4 main points on the transparency here. First of all of the real world assets like invoices and loans have been tokenized into a non-fungible token. So investor can track each of the promissory notes back to the underlying real world asset on the blockchain in terms of performances like repayments and delinquencies. Second, our platform is integrated with the asset originators mostly via the APIs, so that we are able to provide a daily updates on the asset status, like repayment, delinquencies, and any potential issues in the underlying exposures. And it is integrated also with Plate and other types of banking APIs. So there is a full visibility of the collection account. We think this is very, very important because ultimately cash will determine your the investor's safety of their investment and to determine whether they can recover their money back. If the collection is not up to a certain standard, for example, there will be some kind of remedial actions like reducing the level of origination up until the point that repayment is fully caught up. And our platform also automatically tracks the covenants and reports any triggers if it is breached. Because we basically codify the legal contracts that was, or any, we can predetermine a lot of eligibility, setting up the LTV levels and any other covenants. Therefore, the platform will be able to track it on a day-to-day basis. So what we bring here is experiences in working with asset originators around the world, especially around in emerging markets, and our deep expertise in the asset classes that we're focusing on, our deep understanding of decentralized finance and how it works with different lending protocols and how to serve the needs of investors in terms of the ability for it to be able to track the underlying asset performance. I would say that we are able to bring individual asset digital asset investors the kind of return that is only traditionally available for institutions for real world assets. Thank you. Questions?
Any questions, guys?
Okay, so I just have one question. What sort of due diligence you mean when you say you are taking care of at the time of the selection of the asset originators? Can you please elaborate on that front? And yeah, what sort of minimum legal framework you have applicable to which geography, and which asset originators do you think are at this point of time you serving? So yeah, just 3 quick points if you can just straight out. Thanks.
Sure. I guess your first question is how we select the originators that we work with.
Yeah, and the due diligence you undertake in terms of the selection of them. Yeah.
Sure. Because both Kwon and I had a lot of due diligence experiences when we work in a city with PwC, and so we perform a robust due diligence to the originators we work with. Although that the assets are sold, obviously moved into an asset SPV, but because the kind of originated are alternative lenders that we work with, they typically have a smaller portfolio. So we're not talking about like 50, 100 million per originator. We're mostly talking about 5, 10 million or 20 million. Therefore, the ability for the asset originator to serve these debts, very, very important. So not only that we look at their historical record, we look at their latest loan book and analyzing their portfolio in terms of delinquencies, defaults, and late repayments, all sorts of APIs. We're also looking into their experiences and their technology. We always have a platform demo with them, their experiences, and also their viability as a business. For example, we would review all of their legal documentation in terms of their arrangement with their creditors, their existing creditors, to make sure that there is no loan covenants that would prohibit them to move any assets to the SPV. This is just an example. We will look at their financials, their management accounts. So it's the due diligence is done on 3 levels. First level is on their on founders' experiences and on their tech and on their underwriting process. The second layer is on them as a company. All their we talk to their accountants and lawyers to find out the viability of their business and their existing commitments. The third layer is obviously the underlying asset that will be brought to the SPV once the things are going, or any future assets. So these are the 3 levels. Only after that we're happy that the DD is they pass the DD, then we'll move on the next stage of the discussion. I hope I answered your question.
Yeah, thanks for that one. So there's no rating agency, or is there some rating agency also you hire, or have this one for risk score or fraud score assessment or something?
I think Kwon, you want to say something?
Yeah, let me try to come in there. So as Manri mentioned, these are asset originators that are fairly new and still quite small, portfolio 5, 10, 20 millions. The founder themselves are very experienced financial services professionals. They work for Citibank before. They work for many type of financial institutions, and then decided to start up on their own. But reality is they will only be in business for about 3-4 years, and some of them also pivoted. For example, one of the asset originators we work with, who are based in Dubai, pivoted from being like a marketplace into a principal lender, and they have about 2 years principal lending experience. So to your question in relation to the rating agencies, the answer is no at this stage. We don't need, or let's say we don't need to engage with a rating agency, nor the asset originator will be able to afford that. Now, one of our advisors saying that it's a bit like elective dental surgery. So if you don't have to do it, if the investor don't require, then why would you do it? However, that doesn't mean that we just pass on these asset originators and their portfolios at ease. Reality is we use rating agencies standards. For example, with receivables invoices, there's a very well-known standard by Asset Tools, where they basically set out the methodologies to set up different kind of reserves. For example, the bad debt reserve, the dilution reserves. So we basically apply the same methodologies that these rating agencies applied in respect of much smaller portfolios. And over time, with these methodologies and with more data, then our platform will become more and more, let's say, accurate in predicting the level of loss. But we are following the what we call the institutional approach when it comes to dynamic provisioning, for example, that will determine the level of the sort of risk buffer, or what you call the credit enhancement, determined by the level of skin in the game that the asset originators have to have within their portfolio.
I think we've got another question that coming from the chat. So we're not funding any LCs right now. LCs, for those who don't know, is a letter of credit. Our assets that we finance is mostly loans that's relating to the supply chain, or like invoices, these kind of assets.
Yeah, I can say a bit more about LC. So around the world, LC is let's say it's a more sort of diminishing type of financial instrument, because it's extremely complex. So here more and more assets are now moving, sort of trade finance are now moving towards what they call open account. So typically you ship the items. Once the item has been received, then the invoice get accepted, and then 60-90 days later they get paid, and we effectively invoice finance those asset originators who provided finance in that kind of space. So that is where the world is moving to. So are you cash funding production deposits?
No, we don't.
I'm not sure what you mean by that. Could you could someone
so in my presentation, I think we made it, it may not be very clear. So we are funding the originators who have originated the loans. Now these loans can be based on invoices. It can be based on revenue. So for example, one of our originators, they basically have arrangement with Amazon, and they funding Amazon's merchants based on their 2 months of revenue on Amazon. So there is the merchants will have a track record, and then our originator will then fund them based on 8 weeks of revenue forecast. So that's one time. So because they have arrangement with Amazon, they also have arrangement with like a Deliveroo equivalent in
Talabat, yeah.
Talabat or Zomato. So these kind of online platforms. We then have another originator who is funding based on invoices. Now, but these are loans that's on the receiver, invoice receiver, rather than the invoice sender. However, the entire exposure for this invoiced amount, for this loan amount, was then secured 100%. So these are the assets we're talking about. So we don't fund directly, we don't lend directly to receivables, for example.
So in that particular example that Marie mentioned, the asset originators also have credit insurance with the like of AXA and Euler Hermes. So these are AAA, AA rated, or single A rated insurance company for 100% of the exposure. So unless this company goes down, then it's very unlikely that this receivable will not be collected. So actually, it's actually more secure than just a verified account receivable, like accepted invoice. But a a sort of turn that into either a loan or some kind of a negotiable instrument like promissory note that is backed by the insurance by these highly rated insurance company. So, but that works for some originators. It may not work for other because of what happening, as you may know, with the insurance market following the debacles with Rincio. So within trade and supply chain finance, credit insurance is going through some kind of price adjustment at the moment. So it's not always easy for the asset originators to be able to secure insurance. So one of the initiatives that we are, as we expand the fund, is that we actually will negotiate a little bit like group buy, where we can actually approach the insurance ourselves and provide a level of coverage over the entire portfolio, as opposed to requiring individual asset originators to go to the individual to the insurance company. That way, we'll be able to save costs for the asset originators, but ultimately it means that we'll be able to offer a higher return for the investors, whilst potentially will be lowering the risk across the portfolio.
Are you first, Lian, at the borrower, because the asset has now moved to the SPV? So yes, we are. The senior note holders will be the first one to be paid, the most senior.
That's right. Creditor. And in this SPV, there's no other creditors. We are the only creditor in that SPV, and you are the only creditors in our issuer SPV. So,
correct.
Thanks, guys. Don't think we got any more questions. Nice.
Yeah. So I think the other thing that sort of coming back to one of the questions around due diligence before is that we also benefit from asset originators who are already using Binkabi technology. So that is the origination technology. So where the assets or the loans or the invoice have already been tokenized. So it is, and having certain level of operating history as well. So that is where we can actually leverage the network to be able to, one, providing us with candidates for the funding on the Untangled side, but two, also help us to basically verify by looking at the actual records that is happening on that platform.
Nice. Well, thank you so much, guys, for the in-depth details about your pool. We're headed towards the end of the meeting here, so thanks for everyone that's attended. And yeah, sorry that we couldn't record. I don't think we got recording for the first part, but we got all the good stuff recorded, so it's all good. But yeah, everybody for attending.
Thank you, Ash, for hosting.
Yeah, maybe just one quick update for anyone that might have missed it so far. The recent runtime upgrade that we proposed was activated a few days ago. With that, a few things were fixed. Stability issues on the bridge. We doubled the amount of nominators that each validator can have. So there should be fewer validators oversubscribed, allowing more people to stake and earn staking rewards on the nodes. And the last thing was another update on sort of just how the bridge worked internally. And that was the most recent sort of on-chain governance topic. Coming up next is the council vote on minting another 2 million CFG in rewards and allocating those to the reward program. The forum vote has gone through and it will go into a council decision, or actually might already be on the council. Ash, do you know? If not, if it's not yet, it should come this week. So that's the quick update on chain governance.
Nice. Awesome. Yeah, and that's posted up on the forum for you guys to look at, and then yeah, the vote should be on the portal pretty soon here as well. So
it is actually live. I apologize.
nice.
Yeah.
Sweet. So if there's no more questions, I think we can sign off, and we'll see you guys next month, around next month sometime.
Thank you.
Great August. Thanks, everybody.
Thank
Thank you,
you.
Juan. Thank you, Minri.
Thank you.
Thank you.
Yeah, thanks
you,
for the
everyone.
presentation. Bye.
Thanks, everybody. Bye.
Thank you. Bye-bye.